my background, I grew up in the insurance industry, second generation, like a lot of folks. Once it gets into the family, it just continues in the family. We're able to offer really, really attractive commission rates to our insurance partners and still offer a really high quality warranty product that delivers when that customer needs.
I don't really talk about personal lines a ton on here. And in fact, in the past, when I have, it's been because I didn't want anything to do with it. But it's a necessary evil at this point for us. And as Grayson has become more and more comfortable, we have grown our personal lines department to a lot bigger than what I actually even would have thought it was going to get to.
Insurance is regulated. Love it or hate it, every state's got a DOI and you've got to work with and deal with those DOIs. And there's a lot of challenges that come with that, but there's also positives to it. In the warranty space, it's the wild, wild west. And the quotes are super easy. It's year, make, model, and mileage. That's all it takes to be able to get a quote. And so you can create a digital experience for your customers where they're able to start the quote. You can pick it up right where they left off. You could update it. They can pick it up where you left off and really make that seamless digital sales experience as well. We have 3 different layers of coverage. If somebody just wants the core, hey, I just want powertrain, then they can do that. Then they can do a slightly upgraded that includes some brakes and electronics, or they can do our premium, which is truly that bumper to bumper, 1,000+ components inside the vehicle.
What's up, everybody? Welcome to the Power Producers Podcast, where I am surrounded by Houcks today. We have Kyle and Clinton, both guys from the insurance industry. Both, by the way, not to be confused with Cody Houck, who is not CK. He's only K, but my God, the Houcks are taking over the world. You guys are definitely related from like way back when, and there was a branch in the family tree somewhere, but anyhow, we're going to talk about Clinton's new role with Fair, who is a company that's specializing in auto warranties. And before you shut this off thinking that we're going to pitch you to help sell you an extended warranty, we're actually going to talk to you about a better way of that business, that industry doing business that will hopefully help you make some incremental revenue in your agency. But at the same time, it will also put you into a position of not being annoying on the phone. So, first thing when Clint and I talked the first time, first thing I said is, my God, how do you even sell this thing? Thousands of people a day are posting all over social about the car warranty calls and everything else. And quite frankly, man, the memes are pretty funny if you read them, but they're also true to some degree. So before we get into Fair and what you're doing with them right now, why don't you just kind of give everybody the 10,000 foot overview of what led you there, and then we'll get into the nitty gritty and figure out how everybody can make some coin talking about Fair with their clients and prospects.
Yeah, absolutely. And really appreciate you having me on and giving the opportunity to talk to the group here. So yeah, my background, I grew up in the insurance industry, second generation, like a lot of folks. Once it gets into the family, it just continues in the family. But I started on the captive side. So my career started with State Farm. I was a commercial fire underwriter. I was an agency field specialist, kind of like a territory manager, opened my own brick and mortar State Farm captive agency. Did that for a number of years, saw the trends in 2013 to 15, where the online distribution of insurance was becoming more and more popular. Decided to surrender my State Farm agency and get a couple of partners and launch the first digital agency experience in the independent channel. And thought, hey, if I go independent, that means I get to pick my technology, I get to build my integrations, it's all going to work smoothly, seamlessly, and we're going to dominate the world, selling insurance on the internet. Rapidly realized just really how disparate all these systems were, and the fact that our industry at the time, didn't know what API stood for, let alone how to spell it, right? And so that led me down the path of building technology, InsurTechs. I built a couple of independent agencies, worked for a couple of independent carriers, and have been part of the early founding teams of a number of InsurTechs in the marketplace. But most recently, I was on the ventures team at State Farm and decided to learn that side of the role. And during my time there, seeing APIs finally becoming more commonplace, and then seeing this wave of AI. Now, a lot of it's still, we're trying to differentiate between what's smoke and mirrors and what's practical application. But with these enhancements within technology we're starting to see some of these efficiencies come into agencies, brokers, carriers, where hey, we're seeing 20% gains, 30% gains in efficiency in an office. And then the question becomes, well, what fills that gap with that capacity? And that was the question I was looking to answer during my time at State Farm in the BC role. And the first pass is, well, everybody get a 4-day weekend. Well, it's not likely that everyone's going to give their employees time off. Or, you know what, we can just fire a bunch of people. Well, that seems like a missed opportunity and a waste of talent in the industry. And so one of the companies that I came across is a brand new carrier called Fair, and they are in the auto warranty space. And it's a really nice complementary product to the traditional P&C agency that historically has had to really stay in their lane, in the sense that, look, I had to put in quote information into 12 different carriers for just auto and home. And that took so long, I didn't have the capacity to be able to cross-sell deeper into households or accounts across different lines of business. Well, that barrier is gone now. And so now there's this opportunity to bring a new product like Fair in to address a gap in coverage for the average consumer today, that says we can cover that total cost of care of your vehicle. Whether you have an accident, we've got you covered with an insurance policy. If your vehicle breaks down and needs servicing and maintenance, we've got a warranty coverage product for you that can take care of it there. The average engine repairs between 5 and 7 grand. And yet 58% of the US consumers, if they had $1,000 auto bill or repair bill, they'd have to go into debt or put it on their credit card to get it paid for. And so there's a real market need for a product like this, but offered in a trustworthy, transparent way, with peers that they, or partners that they trust. And that's where the insurance industry and the independent agency channel really has an opportunity.
Sweet. So what about Fair made you feel comfortable specifically about going right into what I would think is probably the snake pit or the fire of telemarketing? And honestly, the other thing is, it's not something that I would even think about, quite honestly. I hate to say that. I mean, I have friends of mine who specialize in car dealerships and things like that. And I mean, I know very well how car dealerships can do pretty good with F&I, and
Yeah.
some of the things that they have you do. And I think that the average consumer, by and large, never stops to think about the fact that you're now taking another expense and adding it to your note that you're paying interest on.
Yep.
And they can, and I want to be very clear. I'm not saying that anybody does this. I'm just hypothetically speaking, but they could inflate that amount to whatever they want that to be relative to what you could go pay cash for in the open market, knowing that somebody's going to put that on payments that doesn't hurt as bad. And the next thing you know, you have an overpriced warranty that you're paying even more money on because it's tied to your monthly payment because you didn't want to pay for it up front. And here you go. So those are all things that were just random ADHD thoughts, but I mean, it's a convoluted area. I'm just interested, as somebody who's kind of been more traditional in your insurance journey, like what was it that really sold you on that idea?
Yeah, I mean, David, what you highlighted is one of the primary motivating factors, right? And there's three parties in every insurance or warranty experience, right? It's the carrier, it's the agency or distribution partner, and it's the insured customer. And the most important party in that right up front is the insured customer. And when you talk through that experience, insurance is regulated. Love it or hate it, every state's got a DOI, and you've got to work with and deal with those DOIs. And there's a lot of challenges that come with that, but there's also positives to it. In the warranty space, it's the wild, wild west. There is no DOI for warranty. So you can, as a company in that space, charge whatever you want. So what happens is there's really only a small handful of true warranty carriers. Everyone else is either a white labeler or a reseller or a wholesaler of the product. And so you've got the baseline cost of a warranty product, and then it gets a partnership with like a reseller that then adds a markup on top of it. And then they partner with a dealer, and then there's an additional markup. And those markups are just judged based off of how much they can get away with charging the customer. And it's not the true cost of risk. And that really leads to that first experience of why it's the warranty space has such a tough reputation, and part of that poor customer experience. So right up front there, with identifying that as a need for consumers, but a challenging and lack of transparency in the product offering is part of what made it interesting. Now, for Fair in particular, Will Betteridge, as the founder and CEO of the company, when I first met him in my VC role and he was pitching for the initial raise, one of his value propositions was we don't sell through dealerships. We want to work through partners that are willing to that want to maintain the relationship with clients and make sure that they are protected and covered appropriately. And so the way we're able to come in and price our product is 20 to 40% less than what the cost is inside of that traditional distribution model that comes through the dealership. We're able to offer really, really attractive commission rates to our insurance partners and still offer a really high quality warranty product that delivers when that customer needs. And so the fact that we're saying we want to build a product the right way with the right type of partners that create that right type of experience for that end user, that insured customer, that was a really attractive ethos and value proposition from a company approach and a founder approach that led me to wanting to join the organization and help build out a new warranty experience.
Yeah, I mean, it's interesting. It obviously helped, make customers, clients even stickier, with just another, offering that you can give them. So, and you explained it there a little bit. I mean, is it just as simple as the fact that there's not, three, mouths to feed in terms of, the dealer and, another middleman here, and that's why, because that would be if I'm a consumer, I'm like, well, why is this 20 to 40% less? That's my question. I mean, is that the answer? That's as simple.
The primary component of it is, we don't have those markups with the partners in between. So when we go to work with an insurance agency, we operate at the relationship like a traditional P&C carrier, where we say we're going to pay you a commission rate off of our actual contract cost of coverage for that monthly or total contract value, that total premium. Where in the other distribution model, it is, hey, here's what our wholesale rates are for our vehicle service contracts. Go ahead and mark it up whatever you want. So we are controlling how much, as a carrier, ultimately that markup occurs to be able to pay commissions out to our distribution partners to make sure that there isn't that potential for price gouging or predatory pricing. What's interesting is, even with our ability to do that, we can now also provide a better claims experience. And so we're able to pay out claims. A lot of warranty companies have warranty rates of what they are willing to pay for repair costs inside of garages, and it can create a friction point on what the garage is saying their labor rate is versus what the warranty company is willing to pay for the labor rate. We pay posted labor rates, so there's no friction there. We pay sales tax, which a lot of times gets excluded from the warranty. We'll cover fluids replacement as a part of a covered claim for repair. And so all of those factors go into creating a seamless claims experience and actually expedite the claim settlement, because there isn't that negotiation moment back and forth before repairs begin. And that's all because, we are cutting out a lot of the layers of distribution and going directly through agency partners.
Got it.
Cool. So here's my question. You got about 50,000 producers listening to this episode of the podcast right now. What's your thoughts on how they approach this, and what's their entry point? What's that discussion look like?
Yeah, absolutely. So, being a former agency owner myself, and also being on the carrier side, I know there's a couple of factors that go in for a good carrier partnership: is product knowledge, sales training, and then the technology that enables the ability to do that. So happy to cover all of those things in the order that you want, but starting with that, hey, how do we bring this up as a +1 sale? There's a couple of different ways that we see it attached with partners. First off is, those agencies, when you have those customers that are actually proactive, right? Those dream customers that say, hey, we're going to go in to be purchasing a new car, wanted to call ahead to make sure that we get it updated on the insurance. Unfortunately, we know that that's less. Those are
Where are those people at?
They're the unicorn insureds than the common ones. But the ones that do, you get that great opportunity right up front to be able to have that discussion with them and say, look, we're taking care of your insurance, but we also want to help you take care of the cost of coverage here. We can help you with a warranty product so you don't have to worry about it at the F&I shop at the dealership. And you don't have to worry about, just like David, you highlighted, of having that warranty rolled into your vehicle loan and paying that interest on top of it. So you have that initial conversation there. By the way, warranties have coverage terms from 12 years to 10 years. So you're able to have rate stabilization in a way that you don't experience with traditional P&C auto insurance. And so you can build in a product that usually has a lower cost than an auto insurance policy with that rate stabilization. The next point of sale opportunity is more of almost like an endorsement conversation. And this is where we're seeing, especially a lot of our digital agency partners, where they will be going through an auto insurance quote for a new business sale. And they get to that comp and collision and say, look, comp and collision on your auto insurance policy, that protects and repairs the cost of your vehicle if it's damaged, it has sudden damage due to an accident. But we can also offer vehicle breakdown protection for you. So if your car just has sudden damage due to a breakdown outside of an accident, your traditional auto insurance isn't covering it, but we can add that additional coverage for you. Would you like that? Yes, no, checkbox. And then they get 2 separate policies issued, so you don't have to worry about it impacting the auto insurance, but you're able to offer that total cost of coverage without needing to have a really deep, in-depth, separate sales conversation. So it makes it a part of that seamless conversation. And then the last part is just remarketing, right? As for those agencies that have the CRMs, the drip marketing campaigns, want to do the annual reviews, this becomes a nice +1 product conversation where you're able to offer that. And we have a really simplified quoting experience from a tech standpoint where you can embed quoting links. And the quotes are super easy. It's year, make, model, and mileage. That's all it takes to be able to get a quote. And so you can create a digital experience for your customers where they're able to start the quote. You can pick it up right where they left off. You could update it. They can pick it up where you left off and really make that seamless digital sales experience as well.
So what is that next step there? So you send them, you know, so I'm going to send you the link. You can punch in your info and do it yourself. And I mean, we do that for various lines of coverage. I mean, flood is one of them. I'm working on one right now as we're sitting here talking. You know, there's several that you can do that with, you know, where you enter in some info and then now you said year, make, model, mileage. Is that what it was?
Make, model, mileage. Yep.
They go and they fill that in, and then it goes to fair, right? And then it pings back to the agent, or like how does that aspect work? And then once it comes back, then what's the agent doing there?
Yeah. You want to see a demo of it, or do you just want me to talk through it?
I mean,
well, the people listening probably wouldn't appreciate us doing a visual demo unless they're watching on YouTube.
I forgot there's like 6 people that actually watch the video.
Fair.
I know, man. Hey, Clinton might have brought the masses out. If they see him on there, we may hit a record on YouTube. But yeah, I would tell you that talk through it a little bit. As you do that, though, and I may have missed this because I'm over here multitasking. I got a renewal meeting in about a half hour. But my question is this. It sounds to me like this isn't the person going into the dealership buying a new car, right? This is more the person that's going to that privately held dealership that has cars for sale that have some mileage on them, you know. They're mature, I should say, you know, as opposed to new off the lot, right? But maybe they're in a situation where it makes sense. I mean, this makes sense to me because, like, number one, I'm going to be very clear. I bought the second new car of my life when I bought my truck right outside of COVID, because I've always just believed that it doesn't make sense to buy new cars. I buy lease turn-ins with low mileage that have the extended warranty on them. I let somebody else take the depreciation, and that allows me to drive a much nicer vehicle for a lot less money. I would never have driven a BMW 750 if I bought it new off the floor at sticker price, but I got it for 60% off because I got it 3 years after it came out with 25,000 miles on it, right? I think that's, in my mind, that's where the play is, right? I go to an independent lot, I buy something like that. Maybe the car is not certified pre-owned, right? And so now
Yep.
you run into the issues. You can't get the manufacturer extended warranty on it. So now you're in a situation where you probably want that security blanket. And I'm going to tell you guys right now, like, I am one of these people, and I learned my lesson on this. Every time I've bought a car, I've always bought the extended warranty 100% of the time, because I know the animals that I live with, and I know that I'm going to get my money back in some way, shape, or form. My God, we bought my wife a Mercedes like 5 years ago, and within the first 45 days, we had one of the front leather seats replaced, and we had to get a new key fob. I had gotten my money back like 5x on what I paid for the warranty. The other thing is, I don't know if you guys are connecting the dots or not, and I don't know that it's necessarily my place, so I'm not giving financial advice because I'm not a registered financial advisor, but I am going to speak as somebody who understands math. And I don't think that it's a good idea ever to roll this crap into your premium. Like, I've never rolled an extended warranty and the taxes into my monthly payment. Why do I want to pay interest on something that I already hate? So I automatically make sure that I pay that stuff in cash outside that relationship, which I think is huge leverage and something you guys could bank on. But am I understanding that right? Like, is that really the target market? Is that, a solid, not that you wouldn't do it for a new
Yeah.
car dealership or whatever else, but I feel like that stuff's always getting thrown in your face there. I feel like the real opportunity is the people, and I don't know if I missed it or not, but what about if you buy from a private seller? Does that even matter? Can you just go in and enter the information and still get it?
Yeah, so that's the really nice thing. And we think of one other aspect of that vehicle ownership is how's that car's being used. So it can be we sell extended warranty coverages for new vehicle purchases for a lot of consumers because maybe that manufacturer's warranty is just a powertrain or just powertrain and engine, but it doesn't include brakes, it doesn't include electronics, it doesn't include HVAC, right? And so our coverages cover over 1,000 parts inside of a vehicle. So that warranty that you buy at the dealership may or may not be fully comprehensive, and the manufacturer's warranty may or may not be fully comprehensive. And so there's gaps in coverage there for consumers. And you know what? That leather seat that you replaced, it's got the electrical components, that powers that move it up and back. Somebody leaves their windows down, that thing fries. Not that I've done that when I was in high school at an airport and left the windows down for a week straight, but
Oddly specific for not having done it.
Yep, yep. You get those types of things, and that's where that type of coverage comes into play. But so we do see it at new car sale, but we do also see it, hey, when those warranties are expiring after purchasing that vehicle, or it is a private lot or a used car purchase for warranty coverage. So our warranties cover vehicles from 2014. We'll be going to 2012, but 2014 and forward. And it's based off of your make mileage, your make, model, and mileage, regardless of when or where that vehicle is being acquired from. But the other capacity of it is a lot of times in those dealerships, they're just going to try to get you to purchase that warranty as quickly as possible. And you as a consumer want to buy that, get all the paperwork and get out the door with that vehicle. But private personal lines warranties, they don't cover commercial use. Commercial use includes rideshare. So if you go and drive that vehicle for Uber or for Lyft, all of a sudden you no longer have coverage for this warranty that you just rolled into your loan and are paying interest on. And that's not a part of that risk advisor conversation, the type of conversation you get inside of an insurance agency that's trying to provide that holistic protection. You don't get that level of detail or focus traditionally at that point of sale in a car dealership because they're focused on selling that car and you're focused on getting out the door, right?
I'll be honest with you, man. I don't think you get it in an agency either. And what you just said is actually the angle that I would use when you think about the number of people that are doing Uber and Lyft and DoorDash. And even if they were, it's the high school kid that's delivering pizzas. And
Right.
I want to be clear. I'm going to say something, and some of you may get your feathers ruffled, and I apologize in advance for it, but I'm going to call it like I see it. The people that are doing rideshare and delivering food after hours are typically doing it as a second job, and they likely don't have the money for a massive car repair anyhow. You
Right.
are doing your client as an agent in personal lines. You are doing your client a disservice if you don't ask them these questions, because you have to look at things from an overall perspective. And I know that we don't really talk about, quote unquote, total cost of risk on personal lines accounts. Certainly you could when you get into the high net worth space. But if I've got let's just say I've got somebody who's 22, 23, fresh out of college. They don't have a bunch of kids, yet like I do. So they have the nights and they still stay up late and they can go do Uber or whatever to make some extra coin. They're doing that not because they want to, they're doing it because they have student loans and other things they have to pay off. And I could come up with a million different scenarios, but they may have enough to be able to say, hey, look, the likelihood of something happening that would be covered by this policy is X percent, right? And make that percent what you want. If you've got stats, that makes it better. But if not, find something reasonable and just show them you could pay for this now, or you could end up not be. Number one, it's not even just the car repair, because then you don't have the ability to do the Uber or Lyft either because your car's out.
Yep. And then on the commercial side, as we go into commercial, small commercial, mid-sized commercial, those work trucks, work vans, vehicles, if their vehicles break down, they have that shock to their cash flow, and they're used to what their steady bills are. They know what the revenue coming in is from jobs. And then all of a sudden have a $10,000 repair, a $5,000 repair, or their trucks are stuck at a garage for 3 to 5 days, and all of a sudden they're not completing a job when they expect to, and they have that disruption to the cash flow of the business. That can have a massive chain of event reaction experience where now I'm not getting paid for my jobs, but I also have an out-of-pocket expense for the repair. Well, now that I've got that double hit, now maybe I can't make my insurance premium payments. So now I'm at risk of paying my other bills that are still going to come due, even though I wasn't able to get the money for the job and I had to pay this unexpected out-of-pocket expense. And so there's this opportunity to provide protection against that type of scenario for your commercial clients that have the work pickup trucks, that have the work vans, that, yeah, they went and bought it from a dealership, but they didn't tell the dealer it was a work truck. They just said, I wanted a pickup truck, right? And so there's those opportunities where there's real risk exposure for your commercial clients and your commercial business, where you can make sure that they don't have those shock events to their cash flow.
So is it pretty customizable then? You had mentioned some of the stuff that like a dealership is going to offer you. They're just trying to sell the warranty, and there may be some gaps in coverage there.
Mhm.
Like, is that something where you can kind of pick and choose things to cover those gaps, or if
Yep.
there's no warranty at all, you can kind of say, hey, I want this and that, and so forth?
Yeah, so the way our warranty product works is the coverage selections or the customization is based off of two core factors, which is the total length of time and the total mileage of looking for coverage. So length of time can be anywhere from a year up to 10 years, depending upon how old the vehicle is. And mileage can be anywhere from 12,000 miles up to 100,000 miles, based off of the length of coverage that a customer wants. So your average private passenger vehicle is 10 to 12K a year that they get put on the vehicle. So you can kind of time it out with the total length of time and that 10 to 12,000 a year estimate. When you start getting into rideshare or commercial trucks for job sites, hey, rideshare, they can put 500 miles a week on their vehicle. And so it may be a lot shorter of a duration, but mileage is the big rating component, because that's ultimately how much you drive your vehicle is going to ultimately be the primary cause of that sudden breakdown experience. And so you start thinking with your customers, and that's part of that discovery conversation is, hey, how much are you driving your vehicle? To make sure that you're providing that proper length of coverage as a component of time and distance. Within our warranty product, we have 3 different layers of coverage. If somebody just wants the core, hey, I just want powertrain, then they can do that. Then they can do a slightly upgraded that includes some brakes and electronics, or they can do our premium, which is truly that bumper to bumper, 1,000+ components inside the vehicle. And so there's layers or there's levels of protection that you can have that conversation with the customer depending on their sophistication and need. We have a flat $100 deductible. But then we also have built-in emergency road service. So just like if you'd have an auto insurance claim and you need help with towing or battery jump or lockout, we have that same protection built into our warranty product. So if that car breaks down and they have trip interruption, we've got some coverage for trip interruption. We've got towing protection. We've got the battery jump. We've got the lockout, just like you would on your auto insurance. So we truly are trying to provide that complete coverage for the consumer.
Cool.
What have we missed so far, man? I feel like we're all talking at like 90 miles an hour to begin with. I need to slow down a little bit. I haven't even had my witch's brew yet today, which, by the way, I'm going to give Alani a free plug. If you're into energy drinks, go get witch's brew immediately. They have a fantastic seasonal flavor that's caramel apple, and I can't get enough of it.
Nice.
Yeah, you like that one? I said that's not my. I first of all, I haven't had them in a while. I've been all coffee, but like that one, I tried that one. It was not my favorite.
Ooh,
Is
I like it.
is it a mini shot or like
No, it's like a 12-ounce can. It's like an energy drink,
oh,
but
interesting.
it's like it's not like loaded with sugar and a bunch of disgusting stuff. It's like relatively decent for you.
Oh, nice.
As far as
yeah, as far as energy drinks go. I
I
actually have like the absolute best thing I have is it's called a Cumulus, and we have it here at the office. Like we've got a beverage bar in the conference room at this point. We've got a Keurig, a Nespresso, a Cumulus, and a Soda Stream. So whatever you want, we can make you a custom beverage when you come to visit us, which is a safe place. Yeah, very few people ever come to visit us, so I'm good there. But Cumulus is actually a cold brew machine. It doesn't even make hot coffee. It makes cold brew, cold espresso, and nitro cold brew.
Oh,
And let
nice.
me tell you, if you get into one of those nitro cold brews anytime after 11 o'clock in the morning, I'm a big dude, man. I'm still flying at 9 o'clock at night. Like it's really, really bad how much it gets me going, but I don't always want to have one of those. So sometimes I like just I'll drink the witch's brew, and I've tried to stay away from energy drinks, but they got me. They brought me back in, man, with the seasonal flavors. Yesterday I had one, Kyle. I had an Alani called like Twisted Sherbet or something like that, and it tasted like rainbow sherbet, which was actually also surprisingly enjoyable.
Yeah.
But what have we missed, man? I don't want to get too far off track, but
Yeah. I think the other big opportunity, I touched on it briefly, is the technology piece of it. Is, hey, how do we put this seamlessly into our tech stack that operates inside of our agency or our brokerage? And so, again, coming from the space, knowing the need and ask from an API standpoint, we have pre-built exposed APIs. So when a new agency partner comes on board, there's a section right inside the agency portal where you're able to go to our API documentation. You're able to generate your own API keys. You have access to a dev environment. So you can do a full custom embedded API integration if that's an approach that you take for your agency. If you're not quite there, all of your links are embeddable, and each link is custom to each producer inside the agency. So you email, you text, you embed on a website or a landing page, you have all the tagging, and the prospects and quotes that come in get associated directly to the producers that were taking the outreach efforts, the marketing efforts, the cross-sell efforts into it. And then finally, we offer, bulk quoting, because we don't have the same type of needing MDRs or clue reports for rating. We don't need PII information to be able to quote business. So we can have agency partners generate a report out of their AMS of year, make, model. And if they have mileage, great. If not, we'll estimate it based off of the average mileage that consumers drive. And we can do a bulk file rate quoting for agency partners. And all of that gets pushed right into their agency portal, populated for them, and they can pick those quotes right up and just go right out to the customer and have that needs-based conversation. The final piece I would add to that is we do have an in-house business development team. We recognize that not every agency or partner may have the capacity to take on a new product because of a staffing shortage or just other prioritization. So we do offer that as a resource that says, hey, if you're comfortable with it, just like carriers have in-house service teams, we have an in-house service and sales team that will do the outreach, depending upon how you're setting up a particular marketing campaign, to provide the sales support as well. So we're trying to address all those common core needs for agency partners that, I've just learned and experienced over the years, both sitting in that seat and sitting in the seat of a carrier.
Cool. How's everybody reach out and get in touch with you?
Yeah, so I'm on LinkedIn, I'm on Twitter, it's Clinton Houck there, and then from email, it's just Clint, CLINT at fairwarranty.com.
Perfect.
And then for folks that are going to be out at ITC, if any agencies are making that trip or brokerages or carrier partners, we're going to be out there at the Agent Broker Day. We're going to be out there for the entire conference event. Would love to find a few minutes to chat and talk through the opportunity with Fair. And with the average premiums that we see come in on policies, and sales conversations usually take between 10 and 15 minutes as a cross-sale conversation. The average agency is generating $500 in revenue per policy for a 15-minute conversation. And, speaking from the personal lines P&C agency days, that's a higher revenue opportunity than I could get on my, any of my personal lines P&C insurance products. So we try to position it as a really attractive +1 revenue opportunity inside your existing book of business.
Well, I think it's interesting, man. More of the carrier or more of the people who are going into this space are accessing the independent channel as a distribution mechanism. I know that there's been, and it may not be 100% the same, but like Armadillo is probably a reasonable example, right? It's a home warranty product, and I feel like it's not something that I don't work with them right now, but I feel like a lot of my friends do and have had some success with them, and they're still in business, so they must be writing it, right?
Yeah.
So, I think this is something where if you're an agent that's looking for a differentiation, here's the thing: you have to understand when you sell stuff like this, you go in and it becomes a consultative process that shows you're a true risk advisor, not the guy or the lady that's trying to just slide in an extra warranty to make a few extra bucks, and your customer really doesn't know or understand it. Ultimately, we want to have profitable business, and we want to write in the insurance side, we want to write business where we don't necessarily expect people to have claims. Claims happen, right? Cars break down, cars have issues, and it's probably somewhat difficult to quantify what that looks like. And I assume that's what's in the underwriting mojo when you put it through your model is, that's on you to figure out what's going to be profitable and what's not. It's a completely different animal than me going in, analyzing loss runs, putting together a narrative, having a conversation and saying, this is why I think we should do this. You've taken all of that out of the equation. You're going to know whether or not you want it and what the pricing is going to be relatively quickly. Positioning it for the sale is the important part. And I'm going to tell you what, I don't really talk about personal lines a ton on here. And in fact, in the past, when I have, it's been because I didn't want anything to do with it. But it's a necessary evil at this point for us. And as Grayson has become more and more comfortable, we have grown our personal lines department to a lot bigger than what I actually even would have thought it was going to get to. But in his first 14 months, he's already crossed $1 million in premium written. And I never would have thought we would have $1 million in personal lines. But when I ran the reports, sure enough, here we sit. So now what I look at is how many times I hear him having conversations with people down at the other end of the hallway where he's actually taking the time to explain, to consult, just like he would want to have it explained to him. We are never going to be a call center. We're never going to be a bucket shop. We are going to be advisors, whatever it is that we do. And if you don't think that you can make yourself a trusted advisor and sell on value in personal lines, you're missing the boat, because that's where you solve your retention issues. You gain more trust by taking the time to explain potential issues. Let people self-select. You don't need, this isn't a timeshare. You don't need to offer, people tickets to Disney and put them under high pressure to get them to buy from you. You outline what the exposure is. You show them you have a problem, a solution to the problem, and you let them self-select at that point. That's it. But I can promise you, if you commit to having this conversation every single time and you make it part of your workflows, this product will get sold and you will build incremental revenue to your agency. I also know with absolute certainty, if you don't have this conversation, two things can happen. Your client ends up in a bad situation that you could have presented. And number two, you don't sell the product because you don't talk about it. So this is not going to be something that goes away. We're seeing people, who knows what's really going on with the economy, but people are talking about sometimes, some days it's better, some days it's worse. What I know is the dollar doesn't always go as far as it used to, and that's been in existence ever since I was old enough to earn a living. So if you're looking at places where you can leverage less dollars to save more later, and you can make the case for people to understand this, this thing is not a difficult product to sell. And I also believe that it's a product, and I go back to Aflac does a really good job with this, with ancillary benefits. That Aflac, when you go into an enrollment meeting, when you're dealing with a contractor or whatever else, every time I've ever been in one of those meetings, the person who's running the enrollment company says, and we encourage you, we want you to file claims with us because that's where we stand out.
Yep.
We get you made whole, we get you your money, and it's a validation of your product. And I watched, I had a massive enrollment where we did really, really well with ancillary benefits. And the reason why is because the first thing that guy asked when he came in was, how many of you in here already buy Aflac? Raise your hand. How many of you have had to make a claim? Raise your hand. How many of you had a positive claim experience? And there was one guy who had made a claim, one guy who raised his hand, which automatically tells me, okay, well, 25 people in here said they have Aflac and only one person filed a claim. We got to be doing okay there. But he got up and he talked about, man, here's what happened. Here's how quick I got my money. This is how seamless the process was. Everybody else bought it. Everybody who didn't have it bought that product at that point because this guy would have been screwed, or he would have been in a position to file a fraudulent workers' comp claim. In this scenario, I just think it's one of those things that as this becomes more and more mainstream, 5 years from now, this is probably a conversation every single agency is having. Whether or not you're in the early adopter stage and want to be the one to blaze the trail and start down this road is up to you as the agent. I can't force you to do it. Clinton can't force you to do it. But the reality is the product's there. It's a solution to a problem. You're going to save people money that probably really need to save money in the long run. You just have to be creative enough to, when you have your conversation, it's not solely about the insurance premiums and what they're really going to end up spending out of pocket. God forbid something happened to them.
And to help with that, because we have an in-house sales team, we've built a full learning management system. So it's not like a traditional P&C carrier where you just get a product guide and good luck. We have that product guide, you get that training on that side, but then you get to listen to live recorded calls of our sales team having those conversations with customers, having that conversation with a customer that's on a strict budget and is trying to make sure that they've got to take care of their bills every month and not have that shock experience. To the other side of those high net worth customers that go, I don't want to deal with the hassle of negotiating repair rates with a garage. I want a product that just takes care of it for me so I don't have to think about it. So we have those live sales calls with broken down sales approach and conversation components right there for you and your teams to be able to hear and read and learn off of. So you know the details of the products, you know how to sell the product, and then we've got live demo systems where your team can go in and actually quote the product, use the carrier portal system to give you all the tools to feel confident to bring this product into your agency and present it to your clients.
Cool. Dude, we've taken him to church for almost an hour, man. I don't know how much more we can beat this horse, but listen, Clinton's giving you his contact information. We're going to link to it in the show notes and make sure you have every opportunity possible to get in touch with this guy. So if you're a personal line shop that's also listening to this because you're in commercial, we took a little bit of a different turn today, and I understand that there's some commercial application, but at the end of the day, this is a conversation we all need to be having. It's the conversation advisors have, salespeople don't. And when you do, the product will sell itself. You just have to represent it the right way. So I hope everybody takes this as an opportunity to differentiate yourself in the marketplace and go down a road you may not be comfortable or may not have before. But I'm pretty sure that Clinton and his team can make sure you're comfortable real quick, and it doesn't hurt any when you start having checks come in from selling the product. So we're going to wrap it up with that. Everybody, I hope you have a great week. We'll catch you next time. See ya.